Hi, this is Fuad Abasov, a broker with Right at Home Realty, and this is your monthly real estate statistics. Stop watching the headlines, because if you're trying to understand Ontario's real estate market from headlines alone, you're basically watching highlights of a game and thinking you know the whole story. One day it's market crashing, the next day it's market rebounding. Reality? It's neither. Right now, the best way to describe the market is simple. It's not hot, it's not cold, it's fragmented. Different areas, different price points, and different types of homes are all behaving differently at the same time. And if you don't understand that, you will misread the market completely. So let's break it down. Even within the same region, we're seeing completely different trends. Now, let's zoom in even closer, because this is where it really proves the point. If you look at Toronto and some parts of the York region like Vaughan and Richmond Hill, you will see completely different micro markets, all at the same time. Starting with Toronto, we had about 1,491 sales in February, with the average price sitting just over $1.01 million. Inventory is there, over 7,000 active listings, which means buyers actually have options right now. Toronto isn't crashing, it's stabilizing, especially in the condo segment where opportunities are quietly building. Now, move slightly north into York region. Average price is higher, around $1.13 million, but inventory is also elevated, and homes are taking longer to sell, around 40 to 55 days on average. That tells you one thing: buyers have leverage here. And within York region, it gets even more interesting. Let's take Richmond Hill for example. This is one of the most buyer-friendly markets right now, around 6.5 months of inventory, lower sales to listing ratio, buyers negotiating, often below asking. Even though the average price is still above $1.1 million, the power has clearly shifted to buyers, especially in the detached and luxury segments. But here's the twist. In certain segments like townhomes, properties are still selling at or near asking. Again, layered market. Now let's talk about Vaughan. Vaughan sits right in the middle of this transition. Strong long-term fundamentals, high demand historically, but today, more balanced conditions. It's not as buyer-heavy as Richmond Hill, but it's not as competitive as peak years either. Homes are selling, but only when priced right. And this is exactly what I mean when I say you cannot talk about the market as one thing anymore. Don't forget to subscribe for honest monthly GTA stats without the hype. I keep it transparent so you can make smarter decisions. And here's more facts, straight from the February 2026 Toronto Real Estate Board report. Sales were down about 6.3% year over year, new listings dropped even more, 17.7%. Average price sits just over $1,088,000, down about 7%. So what does that mean? Less inventory is coming to market, and buyers are still there, just waiting. In fact, there are over 100,000 buyers on the sidelines watching and waiting for the right moment. That's not a dead market, that's pent-up demand. Now, here's another important piece of the puzzle, and this is something headlines don't really talk about. Homes are actually taking longer to sell across almost every region. Toronto is sitting around 28 days on the market, Vaughan is closer to 38 days, Richmond Hill for example is around 37 days, all noticeably higher than last year. At the same time, inventory across the GTA is sitting at roughly 5 months of supply, which puts us into a more balanced, even buyer-leaning market. So while prices are down year over year, sales haven't disappeared, buyers are still there, just more patient and a lot more selective. Here where it gets interesting. Homes are still selling, but not all homes. At average price points, especially under or around $1 million, we're still seeing competition, even multiple offers in some cases. But once you move into higher price ranges, things slow down. Homes sit longer, buyers negotiate harder, decisions take time. This is not a contradiction, this is a layered market again. Buyers today are not emotional, they are calculated. We've shifted from fear of missing out to hesitation. People are asking, is this the right time now? What if prices drop further? What if rates change again? And because of that, they're taking their time. At the same time, sellers are adjusting too. Some price aggressively and sell fast, others overprice and sit. That gap between expectation and reality is what you're seeing in today's market. Now, the Ontario government is forecasting a rebound, expecting more sales activity and higher land transfer tax revenue in 2026. But here's the catch. Even industry experts are saying that might be optimistic, because right now, interest rate uncertainty is still there, buyer confidence is still fragile, and sentiment is cautious. So yes, a rebound will come, but it may take longer than expected. And here's the most important takeaway, something I used to talk about before. The Canadian dream of home ownership isn't gone, it's evolving. People still want to own homes, actually more than before, but how they get there is different. It takes longer, it takes planning, and it takes smarter decisions. So next time you see a headline saying market is up or market is down, take it with a grain of salt, because the truth is this market rewards precision. Some homes sell fast, some sit, and most fall somewhere in between. And the difference? It's not luck, it's strategy.
If you'd like to receive your own personalized sales report about home sales in your neighborhood, please call me at 647-801-3401 or email me at sold@fuadhomes.com. Thanks for watching and see you next month.